Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's October 1st. We're starting a new month, and today really was this was an interesting day because it was really strong to the downside early, only to end up closing up. We closed yesterday at maybe 1903 or so in that area, and we closed up maybe 14, 15 points today. So it was an interesting day. It looked like it was going to be all downhill. I saw this two-tiered channel here. Earlier, I was looking at one a little bit, not quite as steep, but after playing around with it a little bit, I like this one, and this one turned out to probably be the better trend channel. We got the break here, and then we got another move down. Um, One thing you might have looked at here was the first leg down, and so this is where the second leg. So you're looking for pretty much a measured move, and we came really close. We missed that by a few ticks, but also I would have measured this first move down, and then come over here and look for a possible measured move down. And when we came up way short, that's your clue that hey, we may rally pretty strongly over here. So anytime you don't meet a measured move or a target on a measured move or come up really short and you start trending the other way, that's usually a sign that we're probably going to go a lot further. But in addition, I would have looked at that first leg right there and then look for a measured leg from there. And you see we overshot that just slightly, not by much. And that turned out to be really the support area, and we reversed from there. So always use those targets. They help a lot, and they get you really close, and they'll help keep you on the right side a lot of times when you're eager to, you're not sure where prices are going, you want to exit. And they're not 100%, but it's uncanny how accurate they can be most of the time. So just understand that. But let's talk about the trades. We'll back out a little more, show you what I saw, and then we'll wrap it up for the week. This will be our last chart lesson for the week. No, not won't be one tomorrow on Friday. So, but we'll be back to do it again on Monday. So, just keep that in mind. No chart lesson on Friday this week. But let's talk about the trades. This one was interesting. Somebody else actually sent me their chart this morning. I didn't like this setup on my chart, but I wanted to circle because I want to talk about it. But you can see this shorter term trend line working down through here, and this is right off that trend line. I don't like that signal bar. The guy that sent me his chart, he had a fairly bearish signal bar there, and that is the second entry, but it's not bearish enough for my chart. But I did like this bar right here. So when prices broke below it, I'm okay to put a limit order where you would have entered on this one and see if it comes back and filled you. It wouldn't have, most likely it would have bumped your limit order. Whether or not you would have got filled is unlikely. But sometimes you get filled on limit orders if you get them in there quickly. So it just depends. Um, so I don't know if you'd have got filled on that or not, but this one really on my chart should be green. But I know on his chart, I like the way it's set up. I would have taken that second entry short right off the EMA, right off the trend line. He had a bearish bar. And this is, even though this has a green tint, it's more of a, it leans more to the bearish side because it's only 2 ticks off its low and there's 3 or 4 ticks up to the high side. So keep that in mind. But also, we didn't get a close outside the trend line either. So that was another part that I wasn't sure about. But notice you had plenty of room to get out before getting here. It is right off the EMA. It is right off the trend line. It closes inside. So it probably should be green, really, based on my chart. But then we bounce, and notice what happens here. We're coming up. We get a first entry short. We pull back. We get a second entry short. We're a good bit away from the EMA. You probably would not have this trend line yet, but it's the first break of this channel working down here, and there is a, this one's a little steeper. You can see this one kind of working up. I originally had it drawn right off those closes, and it's working up, and it looks like we get a close outside and a move to a new high. Even if you don't see the close outside there, we definitely, these actually closed outside, and you may not have drawn it quite that steep. You might have drawn it right up through there, but you still get the close out and the push up. But this one was really kind of hard to see, but it's there, and prices are fitting in it pretty neatly until we start to kind of wander outside of it, and then we get a close for sure, and then it turns down. But this is a second entry short. Let me make that a little bigger. And you can see we're moving up, and you get the first push down, and then we push up, and look how bullish that looks, and it breaks above it. You don't want to go long there for sure, because we haven't had a retest of this low yet, and you get that bearish bar. So I like that one to take, and this turns out you don't know that it's going to take off like a rocket like that. You're just hoping to get a scalp out of it, and if you get a runner that takes off like this and you catch it, that's what we like to see. And then we get another push up, and this is like a breakout pullback short right here. But the reason I like this one, it's got a big bearish bar. It confirms this trend line. There's a lot of reasons to like that entry. It is a first entry, but we've moved so far up, and there's another trend line there. And we kind of close outside, and then we try to go higher again and then turn back down. You could just put a stop there. I like that one on a stop, mainly because it confirms that trend line. And if you're looking at a bigger picture, that's like a first entry pullback, second entry, it's got that second entry that fails and doesn't take off like you expect it to, and it turns down. So it's got that going for it as well. But that's going to be on a much bigger picture. But if you went to a bigger picture, you would probably see a failed second entry long there that turns down. So that's a little more advanced. So if that doesn't make sense, don't worry about it. Don't confuse yourself with that. Just wait till you get a little better at this and everything does make sense. But then we start rallying really hard. We get a first entry here. I definitely don't recommend taking that one. We came up short right here, so there's a good chance we may overshoot right here. Usually what'll happen, you'll either come up short or you'll overshoot that amount. But since we're so far down, we're past due for a rally. And so I don't think you should take that first entry right there. It's really tempting, but you'd be better off to wait on the second entry, and you'd be better off to wait on a break outside that trend line too. And we don't get that till here. And we've moved up so far, and this bounces off the EMA. So I like that for a long, even though we're in a downtrend, this is a pretty bullish reversal type right here, and this is going to be a failed second entry short, and that's a big bearish bar. Definitely don't go short there, because you're likely to get trapped just like you did. This is worked too far up. I like this more for a long. I am marking it green. It's aggressive because the trend has been down pretty strong. So, you're being a little aggressive going long here, but I like the fact that it's a trap with a big bearish reversal bar. So just go long right there, and you probably figure you're going to test that high, and guess what? It does. It goes maybe a tick higher, and then we sell off. There's a second entry short right there. This one is not a bad setup. It's tempting, but I think you're better off to wait because we've been moving higher, and we may get one more push up here. And there could be a bigger pattern. This might be a shorter term, but we are looking for a low. It just took a little while to start working lower here. But you can see we made a double top, a lower high, lower low, lower high, lower low. So that tells you we're probably going to end up going down. But I wanted to wait on this failed second entry long here. Notice the new high, pull back first entry, pull back second entry, and it reverses. So I like going short right there, especially when you made a double top and then a lower high and a kind of a bearish reversal type bar. But when it tried to go higher again and turn down, I like either entering there. You probably would have already scalped out of this one and probably came back and got your you probably didn't get a runner, so you can add back on. This was not a really bearish bar. So this is one of those, and you definitely can't go short below that big green one. So wait on this one, And then once we got a break below it, drop a limit order in there where you would have gotten short right here, and you would have got filled on that. It did back up and fill it, and then look at the bottom drop out of it. Boom. That turns out, that right there, if you can catch one or two of these, that's all you need, and you're done by 10 o'clock. And so that's, I mean, that is my goal every day, to catch these kind of trades. And this one is another second entry short. Notice the new low, pull back first entry, pull back second entry, and look at that big bearish bar. It went higher first, so I'm okay actually putting a stop right there and just getting in on that same bar. But definitely when that one closed, drop you a stop right there. Or maybe let it break lower and drop you a limit order. But you may get left. Sometimes you'll get left on those trades. Just drop your stop there and go. And this is also a breakout pullback short and a double top right across here. But this, notice how we kind of we're going sideways here. That's that pullback that retests that. And we even came back and made another double top. It's tempting to go short right there, but I think you're better off to wait and just see if maybe you get another little attempt to go higher. And we did get a break of that trend line right there. And notice it makes one tick higher right there and instantly turns down. I love though, that's a sure sign of a trap in most cases. Just put your stop right there, and that's a quick, easy scalp. It does come back, and it gives you another chance. This one is a failed. Notice the double top, so that's a failed second entry long right there, and another big bearish bar, and then you can count the double top both ways. So then you get another failed second entry, count it both from that one, and another big bearish bar. And then you get a breakout pullback short on that. And I like adding on there if you're still into those trades. But if not, you can enter on any one of these. And look at that big bearish bar. It's really big. It's close to the bottom. What I would recommend here is when it breaks lower, drop your limit order a few ticks back so you don't have such a big stop. And look at the bottom fall out of it again. And remember, I showed you our measured move. It's going to be way down there. And we're looking for a new low. A lot of times I would say you probably don't want to go short right here on the first entry on a breakout pullback short like that. Let me go ahead and put the line across there. It should be there. Just to make it look clear, just to clarify how it looks. So you can see we broke lower, come back. So that's a breakout pullback short. It is real close to that low. So normally I would say you don't want to go short into that, but as bearish as this has been, we're going to make a new low here, and that new low, to make a new low, we got to go lower than this low right here. So you've got enough room to get out right there. It's real close, but you're probably going to at least go a tick or so lower than that at a very minimum. But you can see the bottom just falls out of this thing. So this one's close to being green because we are so close here. There's not a lot of room. But like I said, you got to look at the bigger picture and the context, and look how bearish that thing's been. And this one was almost a little too steep, and this is more of a natural 45-degree angle here. We do have the breaks here, but as bearish as this thing is, we're probably going to make a new low. That's the way I would look at the context of that. And I would be willing to probably, and if I'd entered any of these others, I may skip that. I'm going to go ahead and make that one green because it is real close. And to be honest with you, with it being so close to the low, most people are probably better off to skip that one. And hopefully you got in up here and caught one and were able to ride it down. And then we move higher. You get a second entry short right here, but we've had the break and a big move to a new low. So you got to wait on a trap or something. And there is a trend line coming up here. Now we do have a break and a new high. So, for that reason, we probably should give that one a green one because there's some reasons to want to enter that trade. But I always think when you're looking for a possible reversal that you wait on that second entry, and it comes right here. And look how bearish that is. It traded higher, broke above this bullish green bar right here, and trades higher, and then the bottom falls back out of that bar. And that's a bearish sign. So I like going short right there. It's a lower high after this break and a new high. Go ahead and just draw the whole channel for you. You can see that channel right there. And we got the break, a new high, and then they get that little trap, and then you get another shot right there to enter. And I like that setup, especially as bearish as this thing's been. And then you really get a failed second entry long right here. So even though I didn't mark that one, you almost have to take that one as well. So I'm going to go ahead, and it's a big bearish bar. So if your bar looks like that, I'm okay with you going short right there too. Now, definitely don't go short right down in here. Of course, that's not a very pretty bar either. What that one is, but we never got a break below it. You could almost go long right there, but there's too much overlap, so that's the reason I don't like going long. But when it makes a higher high and then a higher low here and gives you that bullish type reversal bar, I'm okay with going long there. And when it comes back and tests that line again and confirms it and turns up and goes out the other side, I definitely like going long right there. Even though that's close in here, we're making higher highs and higher. Each one of those lows is higher than the last one. So we're starting to make higher highs and higher lows, and we're overdue for a bounce. You don't know that's going to bounce this strongly, but we're overdue for a bounce. And at a minimum, I would be thinking first leg up, second leg up. And notice how once we got there was a lot of selling. That's the smarter traders just saying, hey, I'm going to exit here. I entered down here, and I've already made a nice profit. I'm just going to exit. But this thing just keeps going higher. So I really like those two long entries. And then we pull back and test that trend line again. The only reason this one is green is because it's a first entry, and we've moved a good bit rather quickly. And so notice how it does have to, you do have to get a failed second entry short before it takes off again. And actually, even though that's not a very good bar, I'm willing to give that a blue circle as well. It's not quite 2 o'clock yet. That's that beautiful setup you like to see. They fake everybody out to get short. Notice that new low, pull back first entry, pull back second entry, and it reverses. And that's why it shoots off like that, because they got everybody trapped. Everybody's thinking short again. We've rallied too much, and then boom. So I like that setup. It's just into the 2 o'clock hour. Even though that's not a real bullish bar, it's more of a neutral bar. It even closed lower in the bar, so it's neutral to somewhat bearish. It's more neutral than bearish though. So I like that one for a long. But I'm okay with this one if you're wanting to be aggressive. It's so late in the day that, there's been so many good trades. You don't really want to be too aggressive this late in the day, but we're not really looking at it like that. I'm just trying to mark the trades so you can learn to see them and you understand what they look like. And most of the time, that's going to be a somewhat aggressive entry that you're going to want to consider, especially if you start to get better at this. And this is a sure thing right here that you definitely want to enter, because you got people trapped. So, but that's what I saw. A lot of trades today. Another trader asked me about the big bars. It is a concern. The volatility, you can see all the bars here, and some of them are big, really big, and the volatility's come back again. And we've talked about this. There's really, I really don't have a good answer. I wish I did. I'll be honest with you. I don't worry about the size of the bar too much, but I've been doing this a long time, and I just take the trades that set up like they always do. I put my stop where I always do. I still scalp out at 4 ticks, and I still follow all the rules, but I am kind of skirting around the 2-point stop rule. And for anybody that's fairly new, normally you don't want to take a stop that's bigger than 2 points. So the only way to do this is to get creative, waiting on the trigger. Never try to sneak in the trade early. Always wait on the trigger, because you will get fooled sneaking in early. Trust me. So don't try to sneak in early, but wait on the trigger and then drop a limit order further back up in the bar. The worst thing that happens that way is that you miss the trade, and you will miss some good trades, the ones that take off like this one, and maybe the one that takes off to the upside. You're going to miss some of those. No ifs, ands, or buts about it, but better to miss a trade than to do something to force yourself into a trade and do something dumb. So really the only answer is if you're really comfortable and you're hitting 80 or 90% or even maybe 75% of your wins, then don't worry too much about the size of the bar because you're reading the chart really well, and just put your stop, enter like normal, put your stop where it goes, and if it starts running backwards, it looks like you got trapped, maybe you go ahead and exit and you don't take the full stop, just exit. But you'll end up running yourself out of good trades doing that, so you got to be careful with that as well. But I wish I had a really easy answer for you, but the answer is that you've either got to be more creative on your entry, or you got to there's another answer. You can try to take a bigger target if you're taking a bigger stop, and as you can see, you're going to get much bigger targets by taking bigger stops. So let's say you normally take a 2-point stop on a 4-tick scalp. Maybe you take a 3-point stop and you get a 8-point, 7 or 8-point scalp. I don't know. Maybe you go equal, 3 and 3, or 4 and 4, because you can easily do that on a lot of these trades. So, but until the volatility slows down again, there's just not much else you can do. If you could try going to a smaller chart where your bars are, form quicker, but I can tell you got to be careful there because um, it will get so fast you can't read it properly, and you don't want it to move too quickly for you. So, but try it. I mean, you might be able to. Let's say we're trading the 6,500 here. You might be able to drop down to 5,800 or 5,700, which is not a whole lot smaller, but it might make your bar slightly smaller. So just experiment with that. Open up a few charts. Again, like I said, I don't want to downplay the importance of it, but I honestly do not worry about it too much. I just trade like I always do. And, if the bar, every now and then a bar will get extremely huge, and I will try to get creative with a limit order or something, slip in, let the trade trigger and then see if it'll back up. But generally on the big bearish bars, let me just find one here. They don't back up a whole lot. I mean, here, look at that big bearish bar. It broke below it, and it did back up quite a bit. But a lot of times it will like that's a big bearish bar right there, and when it broke below that one, it's gone. Um, this one, look at this one. Once it broke below there, it's gone. You're probably not getting, use a limit order here, you're probably not getting in that trade. This one looks like you probably could have gotten in with a limit order. Um, you'd be surprised how many you might sneak in with a limit order. But you're going to miss some. That's the bottom line, is you're going to miss some trades. So just keep that in mind. But anyway, I'm going to wrap it up. We'll be back. Hope everybody has a great weekend, a great trading day tomorrow if you trade. I'll come in and trade, but I'll leave early. So if you don't get any emails, if you don't hear from me, you probably won't hear. I'm usually playing golf or something on Friday afternoon, so I don't answer a lot of emails. And I'm trying to stay away from the emails as much as I can on the weekend. So if I'm a little bit slow, if it's some kind of issue with the download of one of the manuals or something, I'll try to get on that pretty quickly. But if it's just a basic question or something, I may not answer it. So I've got to take a break from this stuff sometime, and I've been trying to do that. Take a little longer weekend and try to stay away. I'm a workaholic, so I have to fight this stuff, unfortunately. But I want to. If I can, if I get bored and I don't have anything else going on, that's great. I'll probably sit down and read emails. But, if it seems like I'm a little bit slow, just be patient. I'll get back to you. So don't worry about it. But generally, I try to answer all emails. I'll check the email at least every 24 hours, even over the weekend. So, but if you don't get an answer, I may set you aside if it's not something critical or something I got to do some digging or some look at and study your chart a minute. I may put it off till after the weekend. So just if I do, I'll end up answering you. If you never get an answer back from me, something's wrong, because I always answer all emails. So don't worry about that. If you send me an email and you don't get an answer within 24 or 48 hours, then you might send me another one, because sometimes stuff does slip through the cracks into spam and things like that. And But I always answer emails, so I never ignore an email. But anyway, I'm going to wrap it up. We'll be back to do it again Monday. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.